Now, a very good afternoon and welcome to HYCM's online trading webinar with myself, Giles Cochran, Chief Currency Analyst here at HYCM. Well, wow, we've had some really interesting moves out of the market right now. So I want to get us stuck straight into the webinar, and without further ado, we've got a lot to cover. Now, just to make it clear, as we go through different entries, exits, currency pairs, none of this is trading advice. The whole idea of this webinar is that it's from an educational perspective. You see someone with a professional trading background and you understand how I go about making decisions, and the idea that informs your trading decisions. So it's not a signal service. I'm not telling people which instruments to buy or sell, even though we're looking at different entries and exits. It's all from an educational perspective. Great. Okay, with that being said, we're going to jump straight into the webinar. I've got an exciting one today. So first of all, we can see that risk sentiment has suddenly changed in the markets. There's a headline that's just come out in the last sort of 45 minutes. And just as a reminder, the current COVID-19 crisis has primarily been a medical crisis. So the best way of getting out of this crisis is a medical solution. And we've potentially seen that medical solution announced today, which with Pfizer and BioNTech vaccine reporting a 90% effectiveness. That's a fantastic amount of effectiveness in combating COVID-19. Could be finishing safety data and getting things wrapped up by the end of this month. So the likelihood of a vaccine has all of a sudden ramped up, and the likelihood of a very effective vaccine, which I think 90% effective would be reasonable to call that very effective, is definitely on the cards. So we are seeing now some strong moves in equity markets as a result. So let's just quickly look at markets. So first of all, we've seen US futures markets just rocket higher on that news. We really have broken these recent highs in the S&P 500, taking out highs in the Dow, a little bit of retracement here on the NASDAQ, but equity markets going up across the board, VIX, the volatility dropping even further. Very positive for risk sentiment. That's really telling us how the market is seeing this news positively. If you've just joined in to the webinar, welcome. We're going through the latest positive vaccine news from Pfizer and BioNTech and how that's been impacting the market right now as we speak. Seeing some downside in gold, just retesting that trend line, which we'd expect. We're anticipating to find buyers at that level, found buyers at that level. That's going to be interesting to see how gold's reacting to this news. Would expect a little bit more US dollar weakness, so I'm surprised to see such heavy gold falls on this vaccine news. That's one story to watch. Oil pushing higher, commodity-based currency, copper pushing higher, which is what we'd expect. So the market's fully risk on. As a result, we can expect risk sentiment to continue to be supported on two things. One, this positive vaccine news, and two, the news of US President-elect Joe Biden having expected to take the US presidency. That is all positive for risk sentiment. Now, in terms of trading, there's one thing I wanted to flag up to you quickly, which is this Euro-US dollar pair. Now, typically, we'd expect this pair to have broken, ripped higher with the other dollar pairs. We can see that dollar weakness should result in some Euro-US dollar upside. Now, there is a very large option expiry level at 119. There is a 3 billion euro option expiry level at this point, and it's almost all a call buyer, so it's a buy-side buyer. So you can see how that's capping prices. Often option expiry levels do that, and that's exactly what we've seen here. But I am anticipating this level to break. So conservative traders can enter on a retracement back to 119. Bold traders, I've entered long here, going up, looking for a move up to 119.40 and expecting that 119 level to break. If not now, within the next couple of hours, the New York cut comes at 2 o'clock GMT, and at 2 o'clock that option level expires. So I'd expect that level to break and price to move higher through if it hasn't already. So That's just a quick euro US dollar pair. Stops I could see running just below 118.20, looking for a quick pop higher up to that 119.40 level. 119 just capping prices for now. Usually an option expiry level about 1 billion is enough to move price. 3 billion is a massive option expiry, hence just capping prices. And you can see here, look, that dollar weakness that shot into the market has lifted all the other major currency pairs and sunk the US dollar Canadian. Only the euro US dollar is being capped. It's almost certainly that option expiry level which is doing its work. So once that goes, expect it to go and then buyers back again on that 119 level. So I just want to flag that up to you quickly as we got into the webinar. Now, going back to the main screen, for those of you who joined later on, this is the headline, just come out 45 minutes plus ago. Positive news on vaccine, that's boosted risk sentiment. Now, last week we were looking at what impact a Biden victory was expected to have. Now, for those of you who are following the election quite closely, it became quite clear around Wednesday or Thursday of last week that Joe Biden was expected to win the elections. I was reporting it on my Twitter feed, also talking about it on the HYCM web site. So make sure, just going over to the main page here, if you're not reading my blog, make sure you're reading my blog. It gives you updates day to day of kind of issues that I'm thinking about, key market events. I'm just going to put that in the chat box here. So do come to my blog, and also check me out on Twitter. I do give regular updates on Twitter, and you can find it here at the tag giles.coghlan@CCA. So that's my Twitter handle. I'll just give it to you there, Giles Coghlan @CCA. You can have a look at that there. Great. So let's go back to the main screen. Yeah, okay. So what we're looking for is US stocks and European stocks up, dollar weak, especially against the Aussie and New Zealand dollar, US dollar change one falling, upside for gold and silver. And that's what we're anticipating on a Biden victory. And we saw all of those things. So all of those things were pretty predictable. We were expecting dollar weakness. We saw the dollar weakness into the election result. We were expecting US stocks and European stocks to move higher. We've been seeing that European and US stocks moving higher. We're expecting US dollar change one falling. It is. And we were expecting upside for gold and silver. And we have seen upside in gold and silver over the last few days. So that's something to be really completely aware of. Downside in gold at the moment, I'm not entirely sure of the reasons for those gold moves. So that's one to be watching. Obviously, if things get much, much better, gold ceases to become so attractive because interest rates will rise and then gold's not needed as an inflation hedge. Life gets back to normal. So just watch out for gold selling should life be threatening to get back to normal. It's one outside risk to be looking at for gold, but this trend line is expected to remain supportive for the time being. But I've just got that risk going around in my head as I'm trying to work out reasons for that gold weakness. Gold's typically been rising on a risk-on environment, so that's a factor that we're factoring in as we speak. That euro-US dollar upside looks very attractive to me. At 119 level capping prices. Once the cut goes, New York cut goes 2 o'clock GMT. Bish bash bosh, expecting a little pop up to 119.40 for sure, which is the high around this, these up into those recent highs here, here, here. ADR high. That would be a decent near-term target going ahead. So just wanted to show you that, and because we had that Biden victory expected midweek. They were trades that could be taken. I was buying gold into the event. I was selling the dollar into the event. And I got a lot of good upside in Bitcoin because that's influenced by the dollar. So I did have my best trade last week was plus 10%. So I had my best trade of the year, which was a 10% increase last week. So obviously I'm very, very happy on that. I'll just see if I've got a screenshot, if I took a screenshot of that, and I'll show you, because I did say how I would manage that trade once it's once I closed out, and yes, I have got that. So here it is here. So this was the actual trade I took. You can see here the blue arrow is my entry, the red arrow is my exit. So I exited just under that $1,500 mark. For me, that was a psychological issue, really. I was expecting the pair to go higher as it did, and showed a little bit of weakness in my psychology there, because I just couldn't turn down a 10% return on my account. I just thought, no, I know this is going higher, but I don't want to even have the possibility of anything happening and losing that 10% return of my account. So a little bit of, again, an area for me to improve on that was that, unnecessarily cautious, and sometimes managing a trade deep in profit can be a real challenge. However, I'm not too disappointed. Obviously, it's the best trade of my year. That's 10% in my account, so that's an excellent result that really helps boost that bottom line. So that's been a really, really good point. Going over to the other chart, let's just see if that's it. It was obviously just going higher on the Bitcoin. Yeah, it was just had a trend line break on the daily chart, and then a trend line break on the weekly chart, and then obviously got near-term support of 1400, and just taking profit there. Lovely, job done. And just walking aside from that, Bitcoin, interestingly, potentially, if it closes above that level here of 1400, then that is the highest monthly close ever for Bitcoin. So if we close out November above those recent highs, that makes this near-term support and the highest weekly close very, very interesting. So that's going to be a real big one to be looking at. Okay. Excellent. We're now going to go over to, let's just see what the next thing is. The next thing for us to be looking at is the week ahead that we have coming. So a very light calendar. We've got a few central bank speakers this week and very little in terms of economic data. So what we need to be aware of is, what are the key drivers in the market at the moment? Well, it's the US stimulus package. What size package is going to be passed out of the US administration? Will the Democrat Party manage to win the Senate as well as the House of Representatives? So if they do, you could expect a much larger fiscal stimulus, which would be more of a boost for stocks. At the moment, the anticipation is that the Democrats will win the House and the Republicans will keep the Senate. So this split US administration is still seen as good for general market sentiment. US stocks expected to rise, but the stimulus package is seen as a little bit less. And obviously, a little interesting point is, now if a vaccine has been discovered, is very effective, will that change the size of the US administration package for the stimulus bill? One to keep a careful eye on. So that's going to be driving markets. Second, obviously, COVID-19 numbers, if they keep rising, that will have a less of an impact now on sentiment if a good vaccine's on the way. So just expect that will take less significance the more positive news there is on a vaccine. So nothing to go here on Monday. We've got risk sentiment is driving the market. So in days like this, when there's no key data, it's risk sentiment. So it's all to do with weak US dollar lifting the Aussie, New Zealand dollar. So you get upside bias, Aussie, New Zealand, US dollar. We expect upside bias in the Euro US dollar, downside bias in the US dollar CAD. Okay, so there's plenty of predictable currency pairs to go for. Upside in US stocks, upsides in European stocks, and the US and European futures markets. Tuesday, again, another very slow day. Hardly anything in terms of economic data, nothing of note. This is arguably the most important economic event of the week, and it's the official cash rate for the RBNZ, that's the Reserve Bank of New Zealand. Now, the expectations for this coming week are as follows. The cash rate is expected to remain the same. The bond purchases are expected to remain the same at 100 billion New Zealand dollars. And the RBNZ is expected to launch a new program called the FLP, or Funding for Lending Program. Now, a couple of things to say here, just to key you into what's going on. Futures markets are expecting the RBNZ to turn their rates negative next year. Okay, so at the moment, their rates are low, but they're in the positive territory. Next year, 2021, futures markets expect the RBNZ's rate to turn negative. The RBNZ themselves have said that they're heading towards negative interest rates. They, unlike other central banks, are quite positive about negative interest rates and would like to use them. Now, the more positive the RBNZ are towards negative interest rates, the weaker the New Zealand dollar will be. The less positive they are towards negative interest rates, the more strength will be in the New Zealand dollar. So what we're looking for here is one real key thing. Nothing's expected to change, but what we want to see is what are they planning to do in the future? Are they still keen on using negative interest rates? Because if they still are keen on using negative interest rates, then we would expect that to continue to weaken the New Zealand dollar. So one currency pair that's really of interest, and this is the pair I'm looking at trading for potentially the result, is the Australian dollar, New Zealand dollar currency pair. Now, if we just get rid of some of these support levels for a moment, okay, just take some of these out. Right. What happened is last week, the Reserve Bank of Australia met. And what they've basically said is that they're keeping interest rates as they are, 0.10%, and they're expecting to keep them there like that for the next 3 years. None of this was a surprise, but the market was generally optimistic that the RBA seemed to have saying we're not going any lower. They didn't like the idea of negative interest rates. They were pretty optimistic about general outlook for the Australian economy. So it was a sell the rumor, buy the fact response. It was well flagged that the RBA would be cutting interest rates, very well flagged they'd be cutting interest rates. They did, and said it was buy the rumor, sell the fact response. That is what happened. We saw Australian upside. Now, if the RBNZ keep open negative interest rates and they say, look, we're going negative, then you've got a divergence between the two, because the RBA are saying positive, the RBNZ are going negative. That means upside in the Australian New Zealand dollar pair. So that's what I'm looking at on Wednesday. Any retracement back down to that 1.0600 level, I'm expecting to find buyers. We're seeing some strong buyers here now on that optimism about the vaccine. The Australian dollar tends to benefit a little bit more than the New Zealand dollar sometimes on the positive risk sentiment, and so I'm seeing it lifting against the New Zealand dollar today. Any retracements back down here, I'm expecting to find buyers for tomorrow, heading into the RBNZ event on the 11th of November. One key tool to look for is the bond yield spread. This is the yield spread between the Australian 10-year bond and the New Zealand 10-year bond. You can go to TradingView, plot this spread, just type in this code, AU10Y minus NZ10Y, and then what you get is you get the risk profile between the two currencies. As this rises, this yield spread rises, so too does Aussie New Zealand dollar. As this drops, the Aussie New Zealand dollar falls. That's the basic relationship in a yield spread. It's a very well-known and well-respected relationship. So if say, for example, the RBNZ tomorrow, they say, yeah, they're really all guns ahead for negative interest rates, and they really open up the way, then we expect more Aussie New Zealand dollar upside. Okay, and expect any retracements back down to this level, and we expect buyers on pullbacks. If the RBNZ start walking back from negative interest rates, so if they said, oh no, we don't want to use negative interest rates anymore, expect a lot of strength in the New Zealand dollar. That would be A great pair to trade that would be New Zealand US dollar. So if the RBNZ suddenly said, no, we don't want to use negative interest rates anymore, then expect immediate buyers at market on the New Zealand US dollar pair. You could expect a little bit of upside for, sort of 60, 70, 80 pips or kind of upside. So that's one to be looking for the New Zealand US dollar pair going forward. Going back to the calendar, then Thursday, so that's the main thing. If you've got any questions about the RBNZ meeting, just don't forget you can use the question and answer box you've got there. Kingsley's got a question which I'll get to. Thanks, Kingsley. Anyone else got any questions, just put them in the question and answer box or the chat box. I'll get to it towards the end of the webinar. Wednesday, bank holiday in the US and Canada, so expect slow, sleepy trading in the US session on Wednesday. Thursday, again, very, very little. Got Bank of England Governor Bailey speaking. Again, look out on negative interest rates. Got Fed chairs Powell speaking and President Lagarde. So a few central bank speakers which have the possibility to move markets. That's going to be important. We also then on Friday have Governor Bailey speaking at the Bank of England as well. So Bank of England, Bailey speaking, although at the moment for this week, the main issue for the pound is probably going to be the Brexit negotiations that are going on. So there is a sort of soft deadline, November the 16th. So we should have a week of very busy Brexit negotiations. But remember, the market has got tired of Brexit negotiations now, really, really tired of them, and is not expecting, is expecting a deal. So that's the kind of basic outline. The risks of the pound, if there's no deal, is going to be heavy pound selling. So watch out for the pound. Could be very difficult to trade again this week. So be aware of that. These and some of the key issues that need to be agreed still: state aid, phishing equivalents from financial services. Do take a screenshot of that if you would like. More lockdowns across Europe, although a lot of that is going to be offset now. Sorry, it's short-term Euro upside. A lot of that's going to be offset now with this vaccine news. So watch for further updates on the vaccine. How effective? How quickly can it be used? What's the recovery rate like? How sick were people in the trials, etc., etc. So as long as that safety data finishes and most people are fine using it, that could be the key to unlocking our recent troubles with COVID-19. This is what we're expecting in terms of risk on and risk off. At the moment, markets are very much risk on. Stocks rallying, VIX lower, commodities rising, bond yields, they're pretty much flat on the day. Just have to take a look at yields. That's the only, yields have rocketed higher as well in this vaccine news. So I'll just let you see that. So this, strong. Look at this US 10-year yield rocketing higher, 10-year yields, Canadian yields. Wow, some real strong moves in the bond markets. When you got bond yields moving higher in line with equity markets moving higher, that's saying, yeah, risk is on. So real great risk on sentiment. Should really see that Euro-US dollar pair burst out nice and high, come into that New York cut time. So that's quite good there for the pair. Okay. Yeah, let's go back to the main screen. Okay, so I'm going to get over to the question and answer sessions. Don't forget the one-on-one coaching. That's if you're not an HYCM client, don't forget you can have a number of different deposits or options are open to you if you want to become an HYCM client and get some one-to-one coaching with myself. Let me just look here now at the Fed. Yeah, the Fed on last week. Basically, what the Fed did last week is they kept everything on hold, Kingsley. It was basically an on-hold decision. There was nothing particularly new. It was just ahead of the US election result, Kingsley. So what the Fed wanted to do was be as uncontroversial as possible. And they basically made no changes. It was a very kind of on hold, everything's the same meeting. So unless I think that's the main takeaway. I can't recall anything significant. If there was anything that was of significance, it was a minor point, Kingsley, from the Federal Reserve. Gold, yeah, we've got gold moving a little bit lower at the moment. I've shared my thoughts on gold, which is the only concern with gold is that if interest rates start rising again, if you start seeing yields pushing higher, if we see interest rates expected to rise, then gold will drop. So we need to see how quickly the markets, it all comes back down to how quickly central banks are going to get back to normal if there is positive vaccine. So that's what we're seeing happening in the gold market right now. Yeah, Warren, it's an interesting one. Still, it's low interest rates, quantitative easing, that is still the main theme. My only word of caution here is if interest rates, if gold traders start to think, well, look, interest rates are going to start rising in the coming weeks and months, and we could see some more gold downside. For me, there's two areas of technical support. There's this trend line here. Stay above that trend line, bulls are in control, Warren. Yeah, back down here and it gets a little bit murkier. The next major support is this 1820 level. So they're the levels of support that I'm expecting. For now, in the near term, I'm going to use that technical level of support. So anyone wanting to go long, you know, some people might decide to go long at market, stops just underneath that trend line, and then playing for a high back into these levels. Just got to see exactly how the market digests this new vaccine news. This is the best vaccine news I think I've seen, this Pfizer-BioNTech news. So that's my only word of caution on that. And aside from that, Warren, I'm not sure. Yeah, what do you think of the timing? It couldn't be better, could it? Very interesting timing there. Yeah, they may have held that back until after the US election, Warren. I can see a lot of wisdom in that. If I was working in one of those companies, you think, okay, well, just let the US election take place and then let's tell everyone about the vaccine news. Yeah, so Warren, I think you got a good point there. That could have well been, very well been timed well. Okay, folks, it's been great to have you. It's been great to go through the events. Remember, the big event this week is the RBNZ rate meeting. This vaccine news, that's going to be key. Gold traders, keep your eye on the feed. Keep going on, seeing what's being said on top recent analysis of gold markets. Do check out forexlive.com. I work there as an analyst as well. We'll have some good analysis on the gold market as well. It's a bit of an emerging story, so too early to tell at the moment, but that's what gold traders will be weighing up. You know, will central banks be raising interest rates with a vaccine that's successful? That means business can get back to normal. That'll be the story. Okay, folks, thank you all very much for your time. Great to have you. Great you could make it, and I look forward to being in touch with some of you on Wednesday and some of you sooner than that. Thank you all very much for your time. Thank you now. Goodbye.